Hey guys, Ricky Analog, TrueTrader.net, getting ready to get into the Sunday prep. Hopefully you guys could take me a little more serious this week. Now I got rid of that stupid, silly stuff above my upper lip, right? Looks better? Hope so. Guys, do me a favor. Go subscribe and turn on notifications to the YouTube channel. We are trying to put out more content throughout the week. I want to make sure you guys stay in the loop and get alerted whenever we drop a new video. And if you like it, thumbs up. If you don't, thumbs down. But please leave some comments. We would love to hear some feedback on what we're doing well, what you would like to see, etc. Right? Tomorrow is actually my youngest son's 3rd birthday. Can't believe how fast time flies. So I'm really looking forward to some family time tomorrow. So let's just get into this Sunday prep and get it knocked out so I can get back to being a dad. Before we go any further, as always, some housekeeping. Neither I nor TrueTrader or any of its representatives are licensed registered broker dealers. I'm not a licensed financial advisor. Make sure you understand nothing that I talk about is going to be a solicitation to buy or sell a stock. Understand that trading is risky and that anything I talk about should be taken as strictly entertainment purposes. All right, guys, so let's get right into it. The broader market analysis first. Here's the ES, the S&P futures. I personally use these. You guys can use the SPY. You're going to get pretty similar levels. It's just kind of whatever you prefer. I prefer the ES. The notes I've written down is obvious, right? Another pullback to the 20-day, another hold, and then another straight back up to all-time highs. That 43.64 level is really gaining some significance now. So I'm looking for any flush down to that level as well as the 20-day to be high probability areas where you can get long, strong stocks that are also pulling back to support. I have written down that the monthly pivot up there at 44.66 is pretty much the first area of interest for me to assume there may be some resistance up there. But after that, I really don't see anything between us and 4,500. One key thing to point out though is that now the weekly 20 SMA is lining up perfectly with July's lows. So any flushes down to those levels are going to be a significant area as well. Again, I still am paying attention to see if we lose July's lows. And if we do, it's a red flag for me, but I don't think it's the end of the bull run. I just think it's one domino that would need to fall in a whole line of dominoes, right? So I just keep it tucked away. I am always watching for it. But again, I would need to see other things happen along with that to actually start thinking that things might unravel. Until then, it's the bull market's intact and let's moon. So next is the NASDAQ. I use the NQ and you can see everything's still looking healthy here. Pullbacks to the 20-day, constantly find buyers. We keep making new all-time highs. Trends intact. I do think flushes to the 20-day continue to hold, and it may actually be that buyers step in before that. There's the psychological 15K level, which is right at the annual pivot as well. I need to actually change to a different time frame so you guys can see what I'm talking about. Yeah, so I feel like it could even be that they step in here, right around 15K. Even if they don't and we flush through, you still got the 20-day, and we even have the monthly down there. But I have written down is that if we were to breach the lows from August 3rd, that might get a little dicey. I mean, obviously we still have the lows from the week, which are just a little bit under there. But I would be definitely cautious if we lose August 3rd's lows. You can tell, like, we keep having these, grind up, elevator down, right? Grind up, elevator down. So you can see if we were to test last week's highs, we still might be setting up for another one of those quick elevator downs. And you don't have to get short on those, but you don't want to be early when you're trying to buy those flushes. If you know where to look for the support, you can be patient for that and wait for your setups. Or if you see it developing, you see it setting up, you can go into short the pop mode on anything that's overextended as well. Next, we have Bitcoin. As like we talked about last week, we breached that upper level or the upper line of that channel, and we pulled back like we kind of said we might. But look where we pulled back to. Right to the 20-day, right to the annual, right to the monthly pivots. And it held, and now we are actually making new highs above where that last breach was. We are right into the underside of the 20-day, and we are also right into the weekly 20. So we may find some resistance here, but what I'd be looking for to see is if we continue to make higher lows here and then higher highs. This looks like it's pretty constructive price action, and the bulls might be getting ready to actually make a push here. So cryptos are actually looking a bit strong here, and that's just something I note. Again, I feel like I mention this every week, but I don't trade cryptocurrency, but I do trade equities that follow them. So that's why I keep an eye on these. And if you guys have been trading the markets all last few weeks, you probably have been noticing BTBT. So make sure you understand what's going on with the crypto world if you're trying to trade that name as well. All right, so next is our sector analysis. Come over here to our barchart.com. Great free tool, guys. I highly suggest it. I'm gonna go into stocks, stock market sectors, and we're just gonna sort this by the short-term matrix. And one thing of note, right, is boy, oh boy, did those banks come rolling back hard last week. Utilities was the other notable sector of strength, and it's also the sector that has been showing the most strength over the last month. So that's really all I wanted to point out with the sector analysis. You guys can always dig in yourself, go into each sector, see what stocks in there are strong within the sector or weak within the sector. There's a lot of different ways to utilize this, guys, but please use your tools. So next is our long setups, strong stocks looking for continuation. And the first one on my list is this AVIR. I love this daily chart. Guys, I will point out that I typically won't let stuff that trades under 2 million shares a day through onto the Sunday prep. I do like to keep things as liquid as possible, but that daily chart, I can't ignore this, guys. And the volume it did have a decent volume day for what this typically trades on Friday. What I'm looking for is a pullback to the 30 psychological round number. The annual pivot's at 29.88 and the monthly at 29.41. 29.41, just eyeballing it, looks like it's going to also probably put us right into about 50% fib retrace. One thing to note is it did just push into the underside of the weekly 20, so this may find some resistance up here, which is kind of what we're hoping because we do want to retrace. So what I'm looking for is this flush to happen off the open on Monday, guys, because if it extends further without giving me the pullback to get in, the plan would be adjusted. It doesn't mean that it's off watch for me, but I'm actually hoping for this to be a Monday setup. Now, I would also mention that it's a pharmaceutical company, and typically that's another thing that will sometimes keep stuff off my list, but I went and looked and they have a ton of cash, so secondary is really not any concern at all in this situation. And it is actually a COVID play as well. They are developing some sort of drug that has to do with COVID, so you have that going for it as well. The next stock on the list is BYSI, and it's actually another, look at that, back-to-back pharma companies or bios. Now, this one is a different kind of situation. I actually think this thing is set up perfectly for a squeeze. It gapped up big, you can see on Wednesday, on, what was it, news about a late stage study on, I want to say it was small cell lung cancer or something like that. It was a lung cancer something combo drug. So it inevitably pulled in a ton of shorts, right, due to that large gap. And on top of that, it has a shelf, right? So what biotech doesn't have a shelf? What biotech doesn't want to raise money when they have the ability to do so? Problem is, I think shorts are bent on this because of the way it traded on Friday, and I think everybody's getting overly stubborn and not wanting to admit maybe they're wrong, thinking that the offering coming is going to bail them out. They will do a secondary. I don't know if it'll be this week. I think it will be. But when everybody thinks the stock or the secondary is going to be what bails them out, oftentimes if they price this thing strong, it may give you a flush to buy when the secondary is announced, and then it will squeeze because everybody realized, damn, the secondary is not going to bail us out. Now there may be day trades in it as well. Let's look at the 5 minute, I guess. Yeah, so flushes to levels that it's been holding can be bought as support and looked at as a bounce play, or joining trend on it. Now, I don't want to be long this stock going into the secondary announcement when it's released that they raised. I don't want to be long at that point, because what I want to do is be flat and look for a flush that comes down. Hopefully they price strong and finds buyers. It's going to find buyers. It's going to find shorts trying to cover, but there's going to be a lot of other people with eyes on this as well, looking for it as an opportunity to scoop this up before it squeezes. So that's kind of the play on this name. It also kind of is very reminiscent of what's happening with BTBT right now. Obviously, BTBT is not a bio, but you have a lot of shorts stuck in that thing, knowing that there's probably a huge secondary coming, whether it's an ATM or they do it just a registered direct offering, who knows. But shorts see these things and they end up getting overly biased and stubborn, and they get crushed. I actually did a video a long time ago on my personal YouTube channel, about SEC filings and how reading filings can oftentimes lead you to get killed. So if you haven't watched that, shameless plug, go to my YouTube channel, Ricky Analog, and watch that video and watch all my videos. Next on my list is SBUX, and I know I don't want to show you this time frame. It was actually this one I wanted to use. And I know you're thinking, oh my God, he's got SBUX on the list again. I do. I mean, the stock, it just came off of all-time highs. It's been behaving really well. You can see it held this trend line, and it's kind of just making some higher lows here. I basically have two ideas. One is a swing, and the swing is the one that you can see on the screen where you can see the risk reward laid out for you, right? Basically, buying this thing anywhere over 119.50 with all-time highs is kind of your target, and I think your clear-cut risk is just under these lows, under, let's just call it 117.50. And that's the kind of risk reward that is phenomenal. And you know, you don't have to be right very often to make money when your risk reward is skewed like that. So I'll put that trade on for a swing, but I think there's day trades involved in it too. I'll probably look to join trend for a day trade as well if we get back over 119.50, or if we flush down into that 118 area that's been holding, and then still use the same level of risk. And actually, I had this on as an intraday trade last week and called Goose, who I love getting Goose's opinion on long setups. He's a genius at this type stuff. And he was actually, he's like, Ricky, I actually like SBUX. I think the level's at 115, the 50-day. I totally agree with him. If we lose those 118s, that's the next spot, and I would definitely be taking a shot down there anywhere between 114 and 115. And so another shameless plug is Goose's midweek watch. If you guys haven't been watching that, it comes out Wednesday. He puts together ideas that aren't typically on anyone else's radar. And it's usually stuff that's based on strong daily chart levels. And he has been so spot on lately. Guys, have to check that out. Again, just another reason to turn on the notifications and subscribe to this YouTube channel, because then you won't be able to miss it. You're going to get the notifications when Goose drops those videos Wednesday. All right. Weak stocks, looking for continuation. Just one name, guys, and that's Zillow. And it's really hard to argue with that daily candle when the numbers came out. That stock stayed heavy the whole day. And so basically, it's really just hanging on by a thread here. Two ways I'm going to look to play it is probably a pop back into that 103 level. If you look at the intraday, you can see why that would be a spot for me. Let's see, right here. Right up, if we pop back into that 103 level, I may put it on, and I might even look to scale in a little bit if it wants to push a little bit further. Or if we just want to stay heavy and flush, if we break that psychological 100 level, I may look to just short pops and join the trend after that. And you can see there's actually the annual pivots right there at 98. So hopefully we flush, we crack this low here, which is a big short trigger, catch a bid at one of these next levels, and it gives it a pop back into some resistance for me to get short that way. Remember, there's always different ways to get involved in trade, because we don't know if it's going to be strong off the open, then roll over, or if it's just going to go without us and we have to kind of look to join trend. But make sure you are aware of the different ways you can get into a trade. Okay, and after that is the overbought reversion setups, and MRNA is the only thing I have. And basically, guys, I'm not anywhere near in love with this as much as I was the last time I had Moderna on this same list. So what I would, best case scenario, higher. I would love this thing higher, get another leg, get more extreme. I just don't know if that's going to happen. If it does, I'll be stalking it for some weakness and some lower highs intraday and some levels to crack with extension, meaning meat on the bone to get back to at least my first levels of targets. The other way it could possibly play out, or at least that would make it so I could get involved, is the push. If we make another push and we can't take out all-time highs, there is the possibility we're going to make a lower high on the daily chart, which at that point, if I see weakness, I may look to anticipate the confirmation of the lower high, right? We won't know it's a lower high until we come back under this 394 level and confirm it by making a lower low. And at that point, you know, if we were to put in a lower high on the daily chart and then roll over under 394, the first real target after that's the 20-day. Now, obviously, it may find a bid when it comes and retraces back down to these levels, but you also have to understand that as time passes, that 20-day is going to creep up too. So there's definitely meat on this bone, but I would rather see it higher first. The more extreme something is, the more of an edge there is in catching the reversal. And so next we have earnings, and I'll show you here the list. These are the ones I'm going to go over. But here on Earnings Whispers Twitter page, you can see all the big names that are reporting, right? It is a big week of reports. Should be no shortage of opportunities this week. So let's see here. I'm just going to close that and start with TTD, guys. This, what I've written down on this one has just been such a strong stock. Looking forward to see if it gives good opportunities to get long on some sort of overextended sell-off on the numbers. But I get the feeling that even the 20-day on this might be asking too much. You have the 20-day and the monthly right there in that 78.50 to 79 level. If it were to get south of that, I'm looking at any other significant levels as opportunities to scoop this thing. So the 50-day and the monthly there, and then the quarterly at 68.44. Now, if it were to rip straight up off the numbers, I may entertain a fade on a hard spike up into that psychological 100 level. But I would probably be more inclined to join trend if it were to just not quite get up to 52-week highs on the gap up, and maybe look to buy dips into like the 90s. You have the quarterly pivot there and the monthly all right now at the same little area, because it's just been such a strong stock. So if they beat and it gaps up, you're probably going to find me trying to join trend on a long if it looks like it's going to find support and make some higher lows intraday. Next we have CHGG, and with CHGG I would look to short a hard spike up into that 96-97 area. You have a quarterly and a monthly pivot up there, or I would look to buy a hard flush down in the low 70s, where you have a monthly, quarterly, and annual all stacked together right in the same area. Just call it 70 to 71 and a half-ish. That would be the levels where I would look to either scoop CHGG or short the pop. Depends on what happens off the numbers. Next on the list is AMC, and this is probably the portion of the YouTube video where I'm going to get all the thumbs down. Apes hate when you talk trash on this stock, but I'm telling you right now, just objectively, technically, this chart is broke. It's super broke. So I feel like any big gap up off the numbers, if we're lucky enough to get it, is a super great opportunity to get short on this name. The first level I'm looking at would be a pop into 42. You got the monthly, and it would be kind of getting close up to the top of this trend line here. If they somehow get it through there, gap it higher than that on the numbers, that 46 level is just, I'd probably be starting to polish up my hammer. That's, you got the monthly, or not the monthly, the quarterly pivot, the 50-day, and you also have the highs from July in that area. Actually, it's not the highs from July, but it is the highs from the pop in late July. That level is just a dream. I honestly don't think we see those levels, but if we do, that's the plan for me. Now, if they miss on numbers, which probably is more likely, and it flushes hard, there are some levels I would entertain possibly getting long. 25 is the first level I've written down just because it's a psychological number. And you have the monthly pivot at 26, 21, right? So an emotional flush down there, I think it's going to give a good bounce. If it were to gap below that, the next level for me is 20. It's another psychological level, and it's also got the quarterly pivot at 19. And you can also see it's pretty much the breakout level from the highs back in, was that January? Yeah, late January. So I would definitely entertain scoops into those as bounce opportunities. I would also entertain shorting pops if we gap below last week's lows, and then it somehow pops back up. I would probably look to get short into resistance. So that's the plan for AMC. Sorry, Apes. Next is FUBO, and I actually have to admit the chart looks set up pretty nice here. Last earnings, it gapped up about 5 points, so if it were to kind of do a repeat of that, it's going to put us right into this 32 pocket, which is the monthly and the annual pivot between 31 and 32. So I would probably entertain shorts on spikes up into that level, but I also have to kind of acknowledge that over 28.50 is kind of a nice little long trigger, so it wouldn't surprise me too much if a pop over that gets this thing ripping. If the stock looks really strong, so here's the thing, I don't mind shorting an off the open spike into those levels, and if it comes back in and starts to hold levels and make higher lows, I don't mind also entertaining joining the trend and being long in recognition of the fact that it did just trigger a long over that 28.50 level, and we're back over some key levels at that point. So if they miss numbers and it gaps down, the idea pretty much becomes I would entertain flushes down into the 20 level where you have the monthly and the quarterly pivot stacked up right there. So that's how I would look at FUBO. Next we have coin, which I really think this chart's set up beautifully. I actually started swinging long in this last week in the SEP account, and trust me, nothing what I'm talking about here has anything to do with that, because that's such a long-term play where I don't even plan on peeling profits on that till 300 plus if it wants to get there based on this chart setup. But if this really gets a good gap off the numbers, I'm most likely going to be trying to join trend on a long, just buying dips into levels, just because of how good this daily chart looks. I just think that it seems silly to try to fight this thing on the short side at the present time. So next is UPST. Point out last earnings, it actually gapped up about 20 points and then just spent the whole day selling on, literally the whole day. But then again, you know, it's had good earnings too, where the gap up actually turned into 3 solid green days in a row. So 20 points where we're at currently puts us right up into that 155 area where we have a monthly pivot. If it were to gap up into those areas, I may watch it for the fade. If it were to lose levels off the numbers, the areas for me is going to be the psychological 100 area where you got the annual right below it at 98.33. So that would be where I might entertain a long on a flush on UPST. And next we have Unity Software. You guys can see this level here. I don't have to point it out. You just struggle with it so many times, and it's now the 200-day and the monthly pivot. So a big spike up into that 115 area, I may look to hit that short and catch the reversal. If it gaps over that, I may actually look to buy dips back into it, because that's been such resistance for so long. You kind of have to think the 200-day and that monthly pivot and that important level turn into support. So if it can't get over it, for me it's a short. If it can get over it, pullbacks to that offer the opportunity for a possible long. If they miss, the area for me is going to be the psychological 100 level. You have the quarterly, the 50 days up above it, but we have this trend line too that I would look to see if this thing wants to hold. So that's how I'm going to play U. Next is POSH. Not much to say about this one. The thing is, the later we get into the week, right, we don't know where the stock's going to be trading when the numbers come out. So you have to kind of take whatever plan you make early in the week with a grain of salt, because as the week develops, we got to kind of reassess things. But if we were to open up where we're trading now, and then the numbers come out, a gap up in the resistance on this name really just screams short to me, just because there's just so much overhead up here. You got the 20-day, the monthly, and the 50-day, the quarterly, the monthly. Like, there's just so much action of sideways movement here that pops back into those, I find it really hard to believe that this thing gets through that. Obviously anything can happen, but I think the higher probability setup on a gap up into those levels is a fade. So that's pretty much the idea on POSH. I don't really want to even think about if they miss numbers, miss flushes. Like if this were to miss numbers and flush, I'd probably look to fade a pop back into prior resistance. And last on my list is Disney, which I love this stock. I own this in the set from a long time ago. I never look at it in terms of the plan with that. But as far as day trading it goes, this thing triggered a swing long back in July with the break over this level. And so far it's pulled back and held. And it's, you know, if this was to give the swing long target, which is all-time highs, you know, these are great prices to get it at because, I mean, I'll just throw it up here. Let's just look. So all-time highs are up here, and your stop would be under this level here, okay? So anywhere around these levels, you can see the risk reward is just insane, right? So if you want to, and I guess I'll just leave this on the chart here, but that's the swing idea, right? It's triggered and it's pulled back, it's giving better prices, everything's still intact. The problem is, now that it triggered, that if we lose this 167.10 level, this thing really could get tumbling, which is why that's your stop, right? If you have this on as a swing, that's why that would be what I would use for my stop, because under that, and this thing could really roll over. So basically what I'm looking for on the earnings report is if it gaps back up, I'd probably be looking to buy flushes back into some of these levels. It just depends where we can expect a retrace, but depending on how high it gaps up if they beat. Now if they miss and it loses this trend line, I may try to scoop that 165 area with the quarterly down there, but I don't have high hopes of getting anything much out of it because I feel like pops after that are going to roll back over. I'll have to wait and see, but yeah, I do still like that swing idea as well, especially if they beat the numbers. Now you got another 3 months of at least that the earnings catalyst is out of the way, right? I don't like having early starters on swings heading into numbers because you can just get blown out on bad numbers and have quite a bit of slippage. So for that reason, like if I wasn't in this swing already, I wouldn't want to start it until at least they get the numbers out of the way. So I hope that helps, guys. Again, there's a ton of other names reporting, but like I'm not going to go through all of them. I have personally gone through them for myself, but the difference in what it takes me and the amount of time to look at it myself versus look at it and put together a video recording and a blog post and all that stuff is just too much. So like I do my own preparation, and I really urge all you guys to do your own preparation as well, because you don't want to be winging it. You want to know the levels of importance, and you need to have all your if-then statements formed. So I hope you guys had a great weekend. I hope you spent time with your family and loved ones and people that reminded you what your why is. You can't just be out here trading just to trade. You gotta be trading for, you always have to have a purpose in life, guys. So the weekends is where we get to make sure that we enjoy our lives. So hopefully that's what you did, and hopefully I see you guys fresh on Monday morning ready to crush it. Peace.